Hey there, everybody. It is Mike Wise with CMG and your weekly mortgage update. It's been a busy week in the market as far as interest rates are concerned. The rates are starting to come down a little bit, but want to start out with the real estate side and what we're seeing as far as the inventory is concerned. So these are the active listings on the left-hand side here. They're up 35.2% year over year, which is great news. And then the total listings, the total number of listings, they're up 20.9%. So all good things compared to the last 3 years. But the 3 years, 4 years prior to that, we are still way below the levels that we need to be as far as the inventory is concerned. In fact, if you look at the new listings, they're up 6.2% year over year, again, which is great news. But if you look at the previous 6 years on that, we are not in great shape. So we need to improve and get that inventory up. We do think that it is going to continue to get better over time here. So over the next 6 to 12 months, we think that we're going to see that improve. As far as the economic news this week, it is jobs, 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 and that's where the market improved significantly, and then it came back a little bit today on Friday. So Wednesday, the ADP report. So this is just one report. The ADP report came out, basically said 152,000 jobs were created. That was weaker than expected. They revised April from 192 down to 188,000 jobs. So both those things that drove the market down, the interest rates down, and we were looking great. In fact, the job stayers, their income only increased by 5%. The job changers, they increased 7.8%, but that was way down from April of the 9.3% increase. So all these things are starting to change a little bit. And then Thursday came out, the European Central Bank, they lowered their Fed funds rate by 0.25% or 25 basis points. Canada, Sweden, Switzerland, Hungary, the Czech Republic, all of them lowered their version of the Fed funds rate. In addition to that, the jobless claims came out. They rose 9,000. And then the continuing claims, they went up by 2,000. So we were starting to look like this is the one thing that the Fed was looking at of as far as what's going to break the economy, what's going to make us increase or decrease the Fed funds rate further here because the inflation is so sticky right now. And then on Friday today, the Bureau of Labor Statistics, they ruined the whole thing. They came out and basically said 272,000 jobs were created. It was way stronger than expected of the 185,000 jobs. And I'm not going to go into a lot of details, but the household survey came out as well, which is it's not I wouldn't say it's a great report, but it does give you another statistic. They came out with 408,000 job losses versus the 272 jobs created under the Bureau of Labor Statistics. So a lot of discrepancies here on what's going on with the job market, but those numbers, the unemployment rate, they actually went up to 4% from 3.9%. So that should have drove interest rates down even further. But a lot of things going on here that is weird in the economy, and we don't actually know that these jobs numbers that are coming out. They've been being revised down over the last 4 to 6 months. A month later, but the cat is already out, so that it's basically they give the numbers, the market reacts, and then a month later they revise the numbers down even further. So there's a lot of things going on with those numbers that we don't really like, and we think that they're being inflated a little bit as well. So what happened on treasuries? You can see that the beginning of the week, it started to go, the prices started to go up, which means interest rates are coming down. And then today, just a huge drop off when we got the Bureau of Labor Statistics report. So you can see that it dropped off significantly this morning. Same thing on the yield. We started to see the yield. It went all the way down to 4.29%. and this morning it jumped way back up to just over 4.4%, which is down from last week at the 4.48%. But so the interest rates, they are a little bit better as of this morning. These are kind of hard numbers to kind of show you, but not hard, but they're not quite accurate here. But 7.29 was last week on the 30-year fixed. Today, as of this morning, on National Mortgage News website or Mortgage Daily News site, it was 7.03%. So it was good news. Mortgage rates are down. I think they're going to be slightly higher than that by the end of today. But we will see. Mortgage rates, they're trying to get them down here. We're trying to get them down so that we can get some more inventory, more people moving, and more people buying. So next week the Fed does meet. We're going to get their minutes, their meeting remarks, what they're doing with the Fed funds rate. So we'll see what happens next week. I think on the 12th is when they're actually meeting. I wanted to put this out there to you as well. This is the NAR settlement update. I've got Jennifer Felton and Don Larson coming into the office on June 20th at 12 o'clock to 1:30. I'll have some food here for you guys. But basically, they're going to come in. They're going to go over what is the latest on that NAR settlement. It's going to go into place pretty soon here. But these are two attorneys, two experts in the industry, and local here. It is going to be at my office. It is going to be live. Please register with the QR code there and sign up so I know how many people are coming to the event. But I look forward to having you here. This is Mike Wise. This is the Weekly Mortgage Update. I will be around all weekend this weekend. You can text me. You can give me a call. Love to hear from you. Hope you have a great week, and we'll see you next week.